Welcome to Real Vision. Excited today to talk to Andrew Keys, co-founder of DARMA Capital. We're going to talk about global macro, staking, and about the NAMI wallet. Welcome, Andrew.
Thanks for having me, Ash. Really looking forward to this.
Yeah, it's a pleasure to have you here. Before we get started and talk about what you're doing now, let's talk a little bit about your history in this space because you've been doing this a long time.
Sure. So primarily my background's been at the intersection of capital markets and software engineering. I previously worked at a bulge bracket bank and built a medical database company at the same time Bitcoin happened. So between working at a bulge bracket and building a medical database, I knew everything that was wrong with payment systems and legacy databases. But when I saw Bitcoin, I thought of it as this interesting, funky experiment in monetary policy, but we couldn't add arbitrarily complex business logic to Bitcoin. A simple if X happens, then payment, else failure, what is now matured to become smart contracts. And so unfortunately, I didn't get involved in Bitcoin too early. But when Ethereum came to light, I was following it more from kind of a computer science and business improvement standpoint, and literally met Joseph Lubin, one of the founders of the Ethereum protocol, at the first ever Ethereum meetup, like the nerd that I am, in Manhattan. And Ethereum hadn't even launched yet. And Joe was conceiving a concept of creating a crypto alphabet or a crypto Microsoft, if you will, that would consider uh, building on top of Ethereum, like Alphabet builds on top of the legacy Web 2 internet. And uh, I thought that was a fascinating concept. And so I basically helped Joe from inception of consensus, uh, basically day zero, pre the launch of Ethereum, bring blockchain to market. And for those of you who don't know consensus, they probably know MetaMask, which is the most used wallet in the space. Uh, Primarily, I personally led the implementation of the concepts of blockchain as a service. A fun little fact is that the first time Ether crossed $1 from pennies, it was because the Wall Street Journal wrote an article talking about Microsoft Azure basically putting a private implementation of Ethereum into the cloud. Uh, Afterwards, we created the Enterprise Ethereum Alliance, which is an open source standards body. Many know the Ethereum request for comment process, so ERC20, so any fungible token, or the ERC 725 is a non fungible token standard. So basically, we built the creation of standards of tokens, of wallets, of identity, of reference architectures of the specification of Ethereum. I also helped create the first derivative on top of Ethereum. And then later in my tenure at Consensus, I was responsible for supporting the venture team and basically the token foundry team that basically created next generation tokens and created the concepts of tokenomics.
So you were present at the creation for Ethereum, really part of this process as the sort of abstraction layers have continued to build, as the functionality of Ethereum has continued to expand. You left Consensus. Tell us why you left and what you wanted to do next.
So I left Consensus, and I still respect and love all of the good people of Consensus. But simply put, I was considering and I built an asset manager, and an asset manager would not sit well inside of Consensus. Consensus is a software engineering company, and at that time, I didn't think that there was much of the intersection of kind of institutional capital markets and blockchain technology. So I went on to build a company called Digital Asset Risk Management Advisors, which is an acronym for DARMA Capital. And simply put, we are financial engineers with a firm understanding of, I'd say, the intersection of computer science, blockchain, and basically investment. And our specialty is in helping protocols grow. So our clients are not necessarily retail. Our clients aren't necessarily even institutions. In many instances, our clients could be the nonprofit foundations that are building these Web3 protocols. So we're a CFTC registered firm deemed a commodity pool operator and commodity trading advisor. And we really have three solid businesses. The first business, which is our strongest conviction, is what I would call quantitative systematic alpha of Ether. So we originally, and simply put, quantitative systematic alpha of Ether meant for every 100 Ether that we own, how do we generate more Ether in Ether terms, not in absolute dollar return terms? So for every 100 Ether we have, how do we generate a new Ether a month, for example? Initially, we did that by trading. We also did that with lending. And most recently, we are doing that with staking. And we now manage over 10,000 validators, staking close to about $1.5 billion of Ether. Secondarily, we have a swap facility that is being submitted to the Chicago Mercantile Exchange's swap data repository, where we enter into swap transactions with Filecoin miners. An adjacent vertical or adjacent layer in the Web3 stack to smart contracts, in my opinion, and a very important one, which I think will take off in 2022, is decentralized file storage. And in an effort to geo-diversify the Filecoin storage facilities around the world, we've created this swap facility wherein miners can use our assets in order for them to stake, in order to basically earn Filecoin storage rewards. And then lastly, we have a proprietary venture investing book. Simply put, we make venture capital investments in protocols or companies or DAOs that we believe we can add value to.
You really do have an interesting background. It's interesting. Most people in this space tend to come from one of two areas. Either they have a strong background in software development, or they have a strong background in the financial services industry. You bring both of them together here, talking about the quantitative systematic alpha strategies. And it's pretty rich and diversified series of things that you guys are doing there. Lending, staking, swap transactions, and then prop investing in a kind of de facto VC context. I think the thing that may have struck most people is the scale of your staking book. I believe you said over 1,000 validators, 1.5 billion US notional.
So 10,000. So 10,000 validators at 32 Ether per validator before the staking rewards. So, yeah.
I mean, this makes you one of the largest staking books in the world.
Yes. And it is indeed our strongest conviction that Ethereum is the substrate of the future of the global economy. And to that extent, it is our passion to validate those transactions.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.